Hello traders, welcome back to Trading Life Masters. This is Zicheng here, one of the lecturers in Trading Life. In this video, I'm going to share you the way how you can use MACD for all kinds of trading styles. Before we start, I hope you can first like the video, share it with your friends, and lastly subscribe. Once you are done, we are ready to start. We are going to jump into the charts right away. And of course, since we are talking about the MACD indicator, so I'll be applying the indicator, which is MACD, into the chart right now. So if you are trading view, you can follow my steps to apply that onto your charts. You head over to indicators, type in MACD. You're going to see this under technicals, moving average convergence divergence. So that is the MACD indicator. Once you press on that, you are going to see the MACD being applied to your charts right below the main chart. So this is the main chart and this is the indicator window. MACD is actually one of the most used indicators because it can generate signals and it's easy to understand as well. I know most of the beginner trader trade it like this. For example, we can see that the signal line, this is actually the moving averages, it is above the zero level. When it's above the zero level, it means that it is overbought situation. And most of the beginner traders, they'll proceed to sell when they see an overbought. As you can see here, it's actually a profit. Let me mark it down with a vertical line. So if you took a sell here, you could have caught some profits. And of course, we have traders, when the line is below the zero level and once the cross happen, they will look for buys when it's in an oversold situation. So if I use a vertical line to mark the cross, as you can see, it's a profit situation over here. Beside the crossover, traders also use the histogram. So you can see there are some bars over here. This is what we call the histogram. So how do traders trade the histogram is, when they see the histogram starts to form on the upper side, they will look for buys. So in this area, they will profit because they take a buy here. Once there's a green bar forming, then they look up for buy, and look, the price went up and gave them some profit. And besides that, we have this one. We can see that the bar has formed on the downside. Then beginner traders, they'll proceed to take a sell, and look what happened, it actually did profit. Now I've shown you some examples and you think that this is some holy grail, seems so easy and so easy to profit, but let me show you some reality. So we can see the lines are actually at the overbought level. This is the overbought level, and traders begin to take a sell. And look what happened here. Price just went down by a bit and crossed back up and touched their stop loss. So this is an example of a failed crossover. Next up, what about the histogram? So we can see the histogram starts to form on the downside, and beginner traders love to take sells. So what happened? The moment you see the bars form on the lower side, you take a sell, and look what happened. It did move down a little bit, but what happened in the end? It crossed back up and touched your stop loss. So in this scenario, in this case, let me show you. In this area, we can see that it formed two losses. One is from the crossover itself, one is from the histogram. Let me tell you the truth about MACD. This is not how you should use it. You shouldn't just rely on the MACD itself. You should add more confluence to it. Today, I'm going to show you the method or the confluence that you can use, which is the 200 moving average. So you are going to go under indicators as well. Type in moving average. So select the exponential. Change the setting to 200. So now, what about this 200 moving average? So 200 moving average is actually a very good moving average to help to tell you what trend is it right now. If the price is above the 200 moving average, it's an uptrend. If the price is below the 200 moving average, it's a downtrend. So how do we combine this moving average with the MACD? So we can see right now, our main priority is on the chart, on the candlesticks window, which is this top part. Now, what can we see? Price is above the 200 moving average now. So the only thing we want to focus on is taking buys. Then we go on to the MACD indicator to see if there's any crossovers. Now, we do see that there's a crossover on the upper side, but this shows that it is for a sell. this doesn't match our main chart window. Therefore, we proceed to ignore this sell signal. We are only going to take the sell signal that's if the price is currently under the 200 moving average. A good example would be here. Price came down, retest the 200 moving average. Now, 200 moving average actually acts as a very good support. It's a very strong one because 200 moving average, it takes the last 200 days average price, which makes it a very reliable data. But there are times that it fails as well. For example, over here. So in this case, it's an uptrend. Price is still remaining above the 200 moving average. So we want to look for buys. So we go on to the MACD. We can see that the MACD is actually below the zero level, which is in a oversold level right now. And it is actually crossing, which means that there could be a buy signal. So you are going to take a buy the moment after you have crosses completely. So once you take a buy here, when the candle closes, put your stop loss below, have a target of minimum 1 to 2 at least. Look what happened. It did take profit. As you can see, Euro USD is in a very strong downtrend. And now look, the overall MACD, it stays below the zero level. Although it has crossed towards the upside many times from the zero level, generating the buy signals, but look what happened. It just kept going down and down. And if you actually follow every single buy signals from here, you are going to have a huge loss. So what you're going to wait for? We are only waiting for the price, for the MACD line to go above the zero level and do a crossover from the upside towards the downside. So in this case, if you look closely, you can see there's a crossover to the downside. So you're going to look for sells in this area, about here. You're going to look for sells and place your stop loss right above this high. It depends on how high is your stop loss. If you have a very wider stop loss, then you wouldn't get hit. But if you have a very tight one, you get hit stop loss. So let's assume that you have a wider stop loss and you will get a minimum 1 to 2 risk to reward over here. So let's look at another example. So now if it did touch your stop loss and look, price actually came back up again. The line came back up and decide to cross back down. So the crossing happens about here and the candlestick is about here. So you're going to place your short position here, place your stop loss above, and have a minimum of 1 to 2 risk to reward. You still get your 1 to 2 from here. We are totally going to ignore everything down here because this is asking you to buy. But right now the trend is a downtrend which does not align. So everyone, this strategy, in simple words, we want the signal generated from MACD aligns with the trend on your main chart. That's it for this video. I hope you have learned the method that I've shared just now. If you have any questions, feel free to ask. Don't forget that this strategy does not have a 100% winning rate, so make sure to risk accordingly to your capital. If you are interested to join my daily live streams, hop on to trading.live and you can join me there. Thanks for watching till the end. Hope to see you in the next video. Goodbye and trade safe.